Hey folks, welcome back to the channel. October is known to be one of the most volatile months of the year, especially during an election year. So let's take a look at what we can expect this month. Today is the 1st of October and the market finished down, but there is still the rest of the month. And even if the first day is pretty bad, historically speaking, the market does tend to recover later on and you get an overall positive month. So this is from the Carson Group. These are all the months listed from 1955 until now, where the first day of the month, the S&P returned negative 2% or more. And some of these are pretty bad, like in December of 2008. The first day of that month, the market was down 8.9%. However, the return for the rest of the month was pretty positive for the most part. And you have a 72% chance of a gain for that month, with the average return being 3.4%, despite the first day being pretty terrible. So larger perspective, here is a monthly chart of the S&P 500. We have a very nice trend going up. So far, it looks like there's nothing to worry about. There was a bit of a scare in August. As you can see, the market came all the way down here to 51.24, but by the end of the month, it bounced right back up. September also came down and then bounced up again. So if we see something similar in October this month where the market goes down and then there's some kind of bounce, then we have to assume that it's the dip buyers coming to save the market. And more likely than not, we're going to see the same kind of bounce as the last 2 months, where it was a buy the dip opportunity, and the month will likely end higher. Now, the difference between October and the previous 2 months, at least historically, is that we're probably going to see a lot more volatility in October, which means even if the market drops down past the bottom of this bull channel, if it finds support, especially down here at around 52.74, which previously was a demand zone, then we could see a rather big bounce that's going to continue into November and December to close out the year really positive. And I'm going to go into why that might be the case this time. But first, it's important to realize that we've already had a really great run this year. From the start of the year to the highs in September, the market has been up more than 20%. And the Carson Group has data going back over 70 years of what the rest of the year could look like when you have a 20% or more gain by the end of September, which was yesterday. So here are all the years, including this year, which are 10 samples in total, where the returns as of the end of Q3 more than 20%. And you can see that for the next month in October, the average and the median returns are actually negative. In fact, other than this year, because we don't know yet, there were only 2 times where the market went positive. And I'm not sure what the reason for this negative bias is, but it could be just the market's been going up so much year to date that it's reaching that exhaustion point and it needs a bit of a breather and pull back before maybe continuing. Because if we look at the total return of Q4, which includes October, but also November and December, then the returns are actually positive on average. You get about a 78% chance where you're going to see higher returns by the end of the year from today. So this is why I mentioned that even though October may be negative and will likely get a lot of volatility, it's more likely than not we're still going to end the year higher than we're at right now. But in terms of October, it's probably not going to be a very good month. But at the same time, let's look at an argument from the bull side, which is that out of the 9 months so far this year, 8 months have been positive. And when that happens historically, again, going back to 1950, we tend to see a positive October. There's only 9 samples here, so 1 fewer than the previous one. But as you can see, there's a 75% chance of October being positive. And not only that, but over the next 3 months, including October, there is a 100% chance, at least historically speaking, that the market went higher. Sometimes not by much. In 1964, the fourth quarter only returned 0.7%. But if you look at the average and the median return, both are above 6%. And so far, out of the 8 times this has happened, all 8 times the markets were positive. So that's a pretty strong indication that, again, even if October gives us a red bar or the market is down, until this area of support is broken, you have to assume that for the rest of the year, the market will want to try and retest the all-time highs. And if it goes past that, then perhaps to the top of this trend line again, because this channel has been in play for a very long time, going back to the previous year. Another stat we can look at here is what happens when the S&P 500 makes all-time highs in September. And there are 22 samples this time, so there's more data for it. And this is looking bullish for October once again, where 2 out of 3 times in the past the market was up. And in terms of the last quarter, you had the market be positive 90% of the time, with an average return of about 5%, which is not bad. That's like a 20% annualized rate of return. So what we can gather from just looking at those charts is that October is kind of a wild card, so we may end the month higher or lower since there are different data saying different things. But in terms of for the final 3 months of the year overall, it does seem like there's a pretty good chance the market will go higher just based on the past data that we've seen. What about technicals? Let's take a look at the daily chart now. And similar to the monthly chart, it looks like a pretty strong market moving upwards. You have a recent breaking of resistance over here where the purple line is. That sent the market to all-time highs. We have a rising support line over here, which at some point the market should go back and retest. So you can see previously we had this really strong upwards push, and that kind of stalled out and rolled over. And it looks like we're getting a second push now. So in terms of where the market wants to go, if I take the point at the bottom of that previous push to the top, and I basically make a copy of that and put it at the bottom of where the bounce happened, then it looks like the next target the market wants to reach is around 59.32. And we may get a lot of ups and downs in here, but I'm going to lean towards the bullish side as long as the market remains above the 21 EMA, which is this blue line. And also it should stay above this purple line as well in order to continue going up, because if it were to fall through this area at 56.62, then that opens up potential downside all the way back down here to 5400, which was a previous level of support that seems to have a lot of buyers there. So for now, I'm still bullish going into the month. Even though today was a down day, it ended with a pretty large wick on the bottom, which means the market pushed the price back up before the day closed, signaling that trend could continue into tomorrow. But ultimately, we have to look at the price action. If it does continue to go lower and continue to trade below the green 9 EMA and then eventually get below the blue EMA, then that's when I will look to make bearish trades. Here you can see previously when the market was going down, instead of the wicks on the bottom, we have these large wicks on the top, and that led to lower prices. So that's not what we're seeing right now where the wicks are going up, but we'll have to keep an eye on it because ultimately it does depend on the price action and not only what the price does on a day-to-day basis, but also intraday, like, oh, really big wick over here. Plus, it's bouncing off of the 50, 21, and 9. Well, that's a pretty strong indication that the market's going to continue moving upwards. So even though short term, it's a little bit confusing because it does look like the market went to a new high in late September, and since then it's been sort of going down. But at the same time, you have all of these wicks on the bottom putting upwards pressure on the price, so it's not really conclusive. But when you zoom out a bit, then overall it still does look like the market wants to go higher, at least so far. It may come back down and retest some of these support levels, but until it breaks through them, it's more likely that we're going to be in one of these years where October is going to end up being positive. But ultimately, we're going to have to look at the price action. So we'll keep an eye on that and see how it goes. In terms of what trades you can do, potentially, if you believe that October is going to be a volatile month, then you could potentially trade a straddle. And that's when you buy and sell the same strike price so that you make money if the market goes up or down, and you'll only lose money if the market doesn't move, which is unlikely because October tends to be a volatile month. So that's it for now. Thanks a lot for watching. Good luck with everything, and until next time.